What's up, guys? Welcome back to another video. Thanks for tuning in to Stock Essentials. We're going to be going over AMC stock, which has absolutely skyrocketed in the market on Monday. A lot of the stocks were green, but AMC in particular did pretty well, up almost 7%, with the 0.5% up in the after hours. And that's mainly because of AMC stock shooting up due to the FDA approval of the COVID vaccine, particularly the Pfizer biotech vaccine. So, because of this approval, a lot of people are thinking that there's going to be higher vaccination rates because it'll instill confidence in the vaccine, because a lot of people were kind of skeptical if it works, but now it's FDA approved, and a lot of movie theater stocks got a huge boost in price from this approval. So that's what's happening with AMC stock. It's shooting up, and we're also going to be going over a really nice options play, which will allow you to capitalize on AMC's higher option premiums and kind of like receive a nice little dividend week over week. Very nice strategy, and I've been implementing this every single week on my own AMC shares, and it's a really nice way to kind of collect a nice dividend every single week, even when the stock is flat. So to go, before we get into this video, take a look at the link in the description for our Patreon. We have buy and sell option alerts. One of our analysts has a 90% win rate last week, or 231% profit and loss percent last week. So very nice signals from this analyst, and you pretty much tripled your money if you followed every single play. So let's get back to the video. AMC stock, let's head over to the options chain. We're going to be doing weekly options. Our strategy here is to sell weekly far out of the money call options. So you're going to receive a little bit of credit for this, and you will basically be act as a mini dividend. It's obviously going to be a bit larger than a regular dividend, but we're going to be selling call options pretty far out of the money in order to capitalize on AMC just being overall kind of flat in the short term. So we're looking at somewhere between a 90% and a 95% chance of profit. So anywhere between like a $44 strike or a $50 strike looks pretty good. If you sell a $50 strike call option, remember, you have to have 100 shares of AMC in order to sell a call option. These are selling covered calls. So if you have 100 shares, you can sell a $50 call option. Really high chance of profit. AMC is very unlikely to hit $50 by the end of the week, and you're going to receive $19 of credit for selling this option, as it's going to most likely expire worthless at the end of the week. But of course, if AMD happens to shoot up in price, say it goes to $52 per share, you had to sell 100 shares of AMC at $50 each. Now that may seem like a loss because the stock price is at $52, but you have to sell it at $50 each. But you're actually going to still be making a ton of profit, because currently AMC is sitting at $37 per share, and you're still going to get that nice capital appreciation from $37 all the way up to $50, which is going to be a $1,300 profit for you. So you are going to miss out on a little bit of profit because you're not selling your shares at $52, you're selling it at $50, but you also are going to keep your total credit of $19. So I've been doing this week over week. Pretty nice strategy here, and I basically have gotten down my cost basis all the way to break even just by selling weekly call options and receiving all that credit. So of course, if you don't think AMC will hit like $45, you could sell a $45 straight call and you'll receive $32 of credit. So the lower the strike you go, the more credit you're going to receive, but you're also going to lower your max profit if AMC does happen to skyrocket one of these days. So I'm probably going to sell a $50 strike call option. I am currently selling a $40 strike call option. I received about $50 of around $60 of premium when I sold it before the stock skyrocketed. But I do think that this is still a good strike to sell. But if you want to be safer, you want to do $45 strike all the way up to $50 strike, and you're going to receive a good chunk of premium. The goal is not to get our shares called away. It's just to sell really far out of the money call options and receive some credit for doing so. So I own 300 shares of AMC. I'm not going to be selling 3 call options. I'm just going to do 1 or 2, because if they do happen to call it away, I still want that unlimited upside if AMC happens to go to, say, $1,000 per share. So I'm not going to be selling call options on all my shares, just a few of them. So we're going to still have that maximum profit that we're looking for if AMC happens to short squeeze. Because remember, we don't know when AMC is going to squeeze. We just have to be patient and wait. And this is a really good strategy to just sell weekly call options on AMC just to get back some premium. And if AMC does drop, you're going to be lowering your cost basis and recovering some of your losses, which is pretty nice. So that's about it for this video. If it helped you in any way, please leave a like, comment down below what your thoughts are on AMC. It's looking pretty bullish, pretty nice. All the movie theater stocks have been doing pretty well. AMC is no exception, and this is just going to get continuously better as the week progresses. Thanks for watching.